on a quarter century of excellence.
We do have Hang Seng, which is coming for some profit booking.
Now, material price movement in a stock due to some market rumor in a notable publication will require a confirmation from the listed entity.
The 22,000 level is the next kind of number which the Nifty will sort of look to scale.
Reliance can and Reliance will grow to be among the top 10 business conglomerates of the world.
40-point decline on the Nifty.
I think January will be a lot more volatile because I think some of these things will be tested.
DAM Capital has initiated coverage with a buy call and target is rupees 1810 per share.
Kalpataru is one of the top players because we operate across very different segments.
We have the 14 top domestic player out of 15. We have the top 14 with us.
IT is under pressure. The Nifty IT index down 0.5%.
For a listed company, as you know, price moves every microsecond. And, it could lead to a deal collapse.
The delta between the two has shrunk big time.
The markets are also taking a bit of a breather after the rally that we have seen through this week.
The last hour of trading for 2023, that's what we are kicking off here in this edition of Closing Bell. That, of course, was the day so far. It's been a little bit of a downbeat kind of day, a bit of a pause, a little bit of red on the screen, and very uncharacteristic of what we are used to, what we've been used to for the most of 2023. We're coming to you from the CNBC-TV18 News studios. I'm Prashant, with me, my colleagues Reema and Surabhi. Guys, afternoon.
Hi, afternoon. We're not ending on a high, but it's still been such a milestone year for us.
Yeah.
20% on the Nifty, 45% on the mid-cap index, and 8th consecutive year of gains for the benchmark indices, a record that no other global index can boast of.
Absolutely. I think it's a good way to end. It's like today's session is reminding you that this market hasn't completely lost it. There's still caution. There's still some profit taking. So maybe
it's just low volumes.
I was trying to say maybe a sign of a healthy market. I was trying to read the positives in the negative.
But I think we're still ending sentiment-wise at a high, right?
Yeah.
I mean, nobody really cares about this, whatever we were seeing on the screen with a 70, 80 point cut. Now, it's going to be difficult to say whether it's 80 points, or 100 or 200 or whatever, and maybe it goes down, the pullback extends for a little bit longer. But the point is, the trend is still up. And I don't think anyone, there's probably nobody who's actually lost money this year. People have made money. The only question generally has been, what over the index or what over the benchmark? Those are the questions. So it's been a fantastic year. I think the message really as we kick off this last hour perhaps should be, enjoy the weekend, enjoy the New Year's, come back and then take a fresh look at what the market wants to do. Of course, we'll track things on a day-on-day basis, but I think broadly, the trend is up. Anyway, gains in pockets like, so today's a bit of a pause, but gains in pockets like autos, FMCG, metals, there's, and the PSU names, you look at the CPSE index, you look at the PSU bank index, energy, that is OMCs largely, all of that is taking a bit of a breather. And we're wrapping up December, getting into January, and I've been making this point for the last 2-3 days. For the last 2-3 days without effect, but maybe some effect starting to show through. 12 out of the last 16 years, January essentially has been a negative month. So it's not been a great year, and there's been no instance where where December has been strong, November has been strong, and then January starts on an extremely high note as well. There's all those 4 years which were which turned out to be good Januaries, there was underperformance in the prior month. So we'll put a piece out on this a little later. But having said this is just January. As I said, the trend and, of course, the mood, sentiment, etc. still remains very, very buoyant. We're talking about the very near term here, guys.
Well, today there is some correction in banks. So the Nifty banking index is down 350 points, 0.7% lower. In that, PSU banks too are struggling. IT's taken a bit of a backseat, and you've got the Nifty PSU stock, CPSE, the Nifty PSE index too, seeing some mild profit booking. The mid-cap index is firmly in the green. The mid-cap index is up 0.5%, though the advanced decline ratio is split right down the middle.
I was just thinking today on the Nifty, the stocks that are gaining. I mean, one, there is the Tata Group, of course, Tata Consumer, and we'll talk about that in a bit. Tata Motors, Tata Steel. But the other sector that's actually finding some green as the year closes out is FMCG. It's almost as if FMCG is saying, hey, don't forget us. We want to stand up and get counted as well. That's the one green sector actually today, interestingly. It's not had a great year, but perhaps trying to chip in and, feel sentimentally high as well. So Lever, Nestle, Britannia, these are some of the stocks which are finding traction on an otherwise down day. For the year as a whole, of course, not the best performing, but reasonable performance, market performer coming in from most of these stocks. Anyway, just to quickly talk about some of the gainers beyond the index. You do have some more traction on names like Ashok Leyland. Auto has been strong through this week, and some of these names like Leyland, even Maruti on the Nifty, they're still up and about. By the way, I didn't complete the entire story on consumer. Look at some mid-cap stocks. Imami, 5% higher. That's also really catching the eye. So we'll talk more about some of these names as we go along. But first up, the strategies for the last hour of 2023. We have Mitesh joining in. Mitesh, it's been a phenomenal year. Now we're getting a bit of a pause. What would you do? Would you trade in the last hour, or are you already packing up and thinking about the New Year's party?
So, Sulvi, unfortunately, there's no party for me. I have a family marriage to attend. So it's kind of a party, but not the ones which we typically enjoy. But I think it's been a phenomenal year. And I think, what is good is that December was the month, which kind of added the icing on the cake. If you remember, we started December with the election results of the state assembly in 5 states. And I think we had a gap up. So we had a monthly gap, we had a weekly gap because the numbers came on the weekend. And Monday we saw a gap up. So I think that gap suggested that, this will be starting some kind of a new move with a lot of momentum. Typically, we have seen that December is a good month because of the year-ending factor, and January sees some sell-off. But when I was looking at the weekly charts and the monthly charts, I think there's a good chance that next 2-3 months still should be positively biased. So I think we'll definitely keep making higher highs. And therefore, the idea is to keep buying on declines or buy stock on a stock-specific basis. So right now, I'm not buying the index, but yeah, a bit more of decline. I would want to, at least start taking long positions. And on the stock side, Crompton is something which has given a good breakout. So that's a buy with a stop at 303. And I would look at targets of 330. And Ashok Leyland is also turning the trend on the upside after months of sideways and corrective action. So that is a buy with a stop at 176 for targets of 192.
Got that. Let's talk about Tata Consumer. Now, that's hit a record high in today's trading session, 4% up after the announcement of Tata Coffee to merge with Tata Consumer, TCPL Beverages, on 1st of January. Mangalam joins in with the details. Mangalam.
Well, what a wealth creator Tata Consumer has been in the last few years. If you just take a look at it, it's a life high today. It's crossing the market cap of 1 lakh crore, an important milestone for the listed market space, but so much so for the Tata Group company as well. It's the 6th Tata Group company to cross that 1 lakh crore market cap milestone. We have the likes of TCS, Tata Steel, Titan, Trent, Tata Motors, and now Tata Consumer in that list itself. The stock has moved 5 times in the last 5 years, and I've listed down a couple of strategic changes that the company has made in those last 5 years, for it to have rallied so much. The biggest one was the amalgamation of Tata Chem's food business, bringing Tata Salt into its own fold. And then there were a slew of acquisitions. They bought majority stake in Narishco, which was earlier a joint venture, a couple of regional companies like Dhunseri Tea. There was the big acquisition of Soulful, and Tata's Smart Foods business as well, which enabled them to, foray a lot more into the packaged foods business. Apart from that, they simplified their structure, the international arms and the Tata Coffee structure, of which the final news came by. The amalgamation happens on Jan 1. They launched foods under Tata Sampann. At the same time, they didn't lose sight of beverages. Narishco Beverages did well. Himalayan Water, as well as the Copper Plus Water business, did extremely well for them as well. For coffee, they continued expanding Starbucks in their cafes and operationally turned positive too. And with all of this, they improved their and increased their distribution infrastructure. So there were a lot of synergies on account of that. How has that impacted their numbers? From FY18 to FY23, the numbers on a revenue basis have doubled. The EBITDA has jumped from around 850 crores to 1900 crores. Margins have, improved in an otherwise inflationary environment, and the net profit has jumped from 550 crores to 1320 crores. The thing now to watch out for, they still have 2500 crores of cash on their books. And they've always said that they're open to a lot of acquisitions, and that could be one of their growth vectors going forward. Other than that, we have Nourishco growth coming in their foods business. And finally, the international business, which has been a bit of a margin diluting factor over the last couple of years. Any improvement out there is something that the street would keep an eye out on. Acquisitions, what they do with the cash, and at 55 times FY25 earnings, it's not cheap. But then if you compare it to all the other FMCG stocks and the growth prospects that the company has, then maybe some on the street would justify this.
Okay, all right. Mangalam, thanks very much. That puts it in perspective, the whole move, the journey, the transition of the company as it has gone from vertical to vertical, including, of course, a lot of M&A. Let's actually welcome in Prakash Diwan. We have lots to chat with him about, but we have to start with this one, Tata Consumer. Prakash, good afternoon. 40% up, not bad, given the way we've seen this market play out. What do you think ahead? And, relatively speaking, it's been the year of industrials and PSUs, etc. I don't know, do you think that 2024 will turn the tide more in favor of consumer at all? And if so, where would you place Tata Consumer in the pecking order?
Good afternoon, Surabhi. So, I think Tata Consumer has had its own trajectory of growth. The vectors have been very specific. We've not seen anything like this happen in let's say in a Godrej or in a ITC or a Britannia, so it's kind of firing on all cylinders. Now you have the Tata Coffee amalgamation, which means it grows, processes and produces the coffee that Starbucks sells. So, everything is kind of going to be so consolidated and integrated that you'll probably see an expansion of margins and operating leverage come up. So I don't think you could compare it with any of them. And you remember we spoke about this when it was just about 26,000 odd crores market cap, and you said it started flexing. The transformation actually was seeded when the erstwhile Tata Global Beverages morphed into Tata Consumer, and that's where you see the change. So yes, you still have probably a good couple of years for them to keep gaining market share and mind space on the markets as well. On the FMCG pack, I think there's no indication that demand is going to come back in a way that can impact or positively, favorably impact most companies. I mean, there's still lots to go. Everybody is trying to kind of figure out the sweet spots in which they want to expand. But there's still some time before that happens. So I'm not, of the camp that this would kind of start transforming. Within the consumer space, if you have something which would start looking very different is ITC more because of the hotel demerger potentially. So which is a different reason. So, but I think cap goods, industrials, old economy stocks will continue to rule the roost, and especially the fact that the next 3-4 months are going to be fairly volatile. It's only where business expansion is happening, you'll make money, not on a hope trade that things will start looking up post-election and things like that. So I don't think it's fair to kind of start penciling in a lot of expectation and hope on just the turnout or outcome of the elections, but you'd rather do the continuity of businesses that's currently on.
Okay, let's talk about another big story. Prices of C-heavy molasses have increased, and there will be an incentive of nearly 7 rupees per litre. Sonal is here to explain that for us. Sonal.
Thank you so much for that. Well, yes, it's a positive outcome for sugar companies. It was an expectation, and finally, the oil marketing companies, they have gone ahead and they've increased the incentive for sugar companies when it comes to C-heavy molasses. Now, this is as per industry sources. The increase has come in by 6.87 rupees per litre, and now the price of C-heavy molasses has increased to 56.28 rupees per litre versus 49.41 rupees per litre. Sources also indicate that in a day or two or in next few days, government will also decide the pricing for B-heavy molasses and sugarcane juice as well. Now, do remember this comes immediately after there were some restrictions on usage of juice and B-heavy molasses to make ethanol, and there was some reversal with that decision as well. Additionally, the notification talks about companies offering additional ethanol from C-heavy against lapsed allocation for B-heavy molasses and juice as well. They can also convert existing revised allocations of juice or B-heavy ethanol for supply of C-heavy ethanol. So this is basically incentivizing sugar companies to use C-heavy molasses for ethanol production, and that is something that will lead to their realizations going higher as well and margins also getting better.
Okay, thank you very much for that, Prakash. I remember chatting with you when first the news came out about, how the government wants to encourage the production of sugar, and therefore, some sugar which was getting sugarcane, which was getting diverted, molasses, C heavy, to ethanol will now be curbed. There is relief. Incentive is coming their way from the oil marketing companies. Would you bet on sugar?
So, Rima, as I said, that particular piece of regulation took away some mojo, and this is kind of trying to give it back. And in the bargain, sugar companies will probably not lose out on their profitability, given the fact that C heavy also will yield much more than earlier. But so actually, if you see, nothing much changes, and the sugar, the stocks have actually gone down and reacted and responded positively to the restrictions that were eased some time back. But my sense is it's going to be the beneficiaries are going to be the ones who are in the ethanol value chain. And I again go back to the company called Praj Industries. It's, and of course, you could also look at ISGEC, which is the other player in that space. But, this actually enables most sugar companies to continue with their expansion plans. And there will be a slew of ethanol production units coming up, greenfield, brownfield, which are not sugarcane dependent. So it could be rice husk, it could be other grains, but that's where order book will keep on getting something which is very different for Praj, and without any letdown in terms of the flow, because there was an expectation that ethanol will come to a pause or stop, and it could get impacted. But my sense, I would play this with Praj Industries definitely, because I see a fairly stronger trend emerging in terms of ethanol production, and there won't be any let up on that.
Okay, Prakash, stay with us. We'll take a quick commercial break here. Market, by the way, is down about 70, so there's some recovery, 20-25 point recovery from the last time we looked at the rates. But so much more is happening stock-wise, and we'll sort of touch upon some of that stuff in just a bit. Stay with us.
CNBC-TV18, embarking on a quarter century of excellence. CNBC TV18, embarking on a quarter century of excellence.
Welcome back. Last 40 minutes left to wrap up the day, week and the year so far. The Nifty is holding above 21,700, a bit of a recovery seen from the lows in the last 10 minutes. One of the big movers today, a stock which is on our radar, is BHEL, and it's now approaching its critical level of 200 rupees per share. The stock is about 0.8% higher, 194 is the current market price. Hormus joins in with why this 200 rupee level is a level we need to watch out for when it comes to BHEL.
Well, you know, today's high also is 199.7, so it has still not managed to cross that 200 mark. And why it is a critical level is because of the fact that it has not managed to cross A and sustain B above those levels since February of 2012. Now, it's not as if it has not made attempts to do so. It has made multiple attempts to cross the 200 rupee mark over the years since 2012. The first attempt it made was in May 2014 when it made a high of 194.3. Since from there, the stock reversed 33% from those levels. It made another attempt in January of 2015. The stock reversed 25% from those levels of 198. And in July of 2015, again it reached 193, and from those levels it corrected almost 70%, and that was possibly the period that started that prolonged period of downtrend which continued until the end of 2020, because since then the stock was an underperformer with 36% losses in 2015, 28% in 2016. 2018 saw a 21% drop, 2019 was a 40% drop. So it's been an underperformer in 5 out of the last 6 years until 2020. But since then, the stock has turned around, and in 2021 it gained 64%. Last year it was up 34%, and this year the stellar rally that it has seen, the stock is now up 150% this year, and which makes it the best calendar year performance that the stock has seen since 2003. So almost 2 decades later. Now, what is the buzz today? Well, sources have told CNBC Awaaz, network channel, that NLC India's almost 20,000 crore Talabila power project contract will have a decision today as to who wins that award, and BHEL is in the fray, and along with it is a joint venture that L&T has done. But the street, some of the analysts are not very convinced about the rally that BHEL has had, and Kotak Institutional Equities is one such, and it says in its note that the market is willing to give multiples to a limited period or limited opportunity earnings, which is a clear violation of any reasonable framework. And it said that the market cap for BHEL can be justified only under a very bullish set of assumptions. And even despite all of that, they are expecting BHEL's net income to be far lower than its current market cap. So Kotak has a sell rating on BHEL with a price target of 65 rupees. But nonetheless, the stock is up 150% this year. The shareholders have certainly made merry.
Oh, yes, they have. Horma's very interesting stats there. Thank you very much. And we'll watch out for this latest bid from NLC. Let's see who gets that one. So thank you for putting that on our radar as well. Prakash, you were just saying, right, you were discussing FMCG, and you were saying that in all probability 2024 will continue to be the year of industrials, capex, old economy. So, you know, where would you place BHEL? Again, the concern with some of these companies has mostly been on the execution side. No one's doubting the order flow. But, you know, what's the advice given that, you know, we've already had this rally? Would you recommend fresh exposure, or would that not be perhaps warranted given the run-up?
No, absolutely. I think the run-up has been too sharp. It's, you know, more of hope building up on the order book. And, you know, it's very easy. The new set of investors today in the market actually go more by numbers than experience in terms of anecdotal data that tells you what can happen if, you know, the order book doesn't actually translate into executable inventory. So that's something which will probably happen at some point in time, and the stock will probably surprise you on the negative side. So I don't think, you know, buying at such valuations where it's kind of priced to perfection makes sense. You know, you recall we spoke about L&T, so we on a particular show where you know, this was just after the March numbers came up, and everybody on the street was kind of writing them off in terms of same thing. The execution wasn't keeping pace with the order book. But look where they've landed. Even with a smaller fraction of that getting translated with superior margins, L&T's moved to a level which is absolutely stunning. I mean, in fact, it's one of the largest stocks on the Nifty in that sector, and it's kind of delivered this. I would still continue putting my money on the likes of L&T, and there's huge expansion that's happening globally, especially in the Middle East, where they could continue to build very decent revenues and margins, while the Indian market, of course, gives them enough opportunities to cherry pick the right kind of projects. So there's no. I mean, I know it's boring to talk about an L&T, saying why would I want to invest into an L&T when BHL is doing so well, but BHL has started doing well this year, and that's why it's got in the limelight. It's got attention because it hasn't delivered much earlier. But L&T will continue to deliver, I think, and you'll probably see some very new milestones coming through in this year as well.
I remember on L&T, the big concern 2 quarters back was the execution of their low-margin legacy orders, which had crunched their margins quite a bit. But I think Q2 numbers were fairly okay. Let's talk about auto sales numbers. They'll be out for the month of December on Monday, 1st of January. Sudarshan joins in with the key expectations. Sudarshan.
On Monday, January 1, most auto companies will report sales for the month of December. And CNBC-TV18 poll indicates that growth for two-wheelers are expected to rise up to 30%, with Bajaj Auto and TVS being top performers, whereas Royal Enfield is seen reporting a modest growth. The reason for the healthy growth is being attributed to low base along with healthy demand. For Bajaj Auto, total sales are seen rising 25% to 3.51 lakh units. TVS may report an increase of 30% to 3.14 lakh units. Hero's growth seen at 10% to 4.33 lakh units. And Aisha is expected to report a modest growth of 0.4% to 68,667 units. In passenger vehicle space, M&M is expected to lead the growth chart, with its auto segment is seen reporting a growth of 19% to almost 68,000 units, whereas Maruti is likely to report an increase of 6% in total sales to 1.47 lakh units. Nomura says small car segment demand has remained subdued with high discounts and it sees downside risks. For FY25, Nomura has lowered PV industry growth forecast to 6% from 8%. Coming to commercial vehicle segment, Ashok Leyland, a pure CV play, is expected to report a decline in sales for the month of December. The sales of Ashok Leyland is seen falling 4% to 17,400 units. And for Tata Motors, it seems CV performance will weigh on its total numbers. Total sales of Tata Motors are seen rising 1% to a little more than 75,000 units. Lastly, in the tractor segment, M&M is seen reporting a decline of almost 3% to 22,700 units. And as per Antic, tractor volumes to remain moderate due to rainfall deficit and unseasonal rainfall in some parts of country and seasonality impact.
Thank you very much for that. Prakash, I wanted to get your thoughts in on Aisha Motors. If you remember, the big story for Aisha Motors this week was rising competition. And you pull up a one-year chart of Aisha Motors, the stock had fallen by nearly 15-20% when competition, increased with Harley-Davidson and Triumph coming out. Stock fell from levels of 3,700. It went down to about 3,000. But look where it is now, 4,130, much higher than the levels that it was prior to the news about the competition resurfacing. How would you view Aisha Motors now?
So I would be surprised if they continue to surprise, on the upside in terms of their sales growth. While we've seen overall, if you look at a very common denominator in the demand composition of consumption, it is the high end which continues to grow. It's actually the bottom of the pyramid which is still struggling to kind of come back, right? Whether it's FMCG, cap goods, white goods, or luxury items. Everywhere we've seen there's no let up in that segment or higher end segment, and that's exactly what's favoring them. When Harley and Triumph came in, they actually priced themselves in a way that it was more of an entry into the market, get better acceptance and all. But the Indian consumer will not very easily switch to these new models or new variants, because Royal Enfield has a legacy which is so strong. It's going to be difficult to take that out. I mean, it's like so many car companies have come, but Maruti continues to have 50% market share, right? So that's always going to be the case, and I think they will be able to successfully deepen their product portfolio this year. And given the fact that raw material pressures are much lower, there could be some margin improvement also, which hasn't come for the last almost 8 quarters. So that's where Aisha is poised, and you've seen Bajaj Auto already getting expensive. Hero has also made a comeback. So from that perspective, people will want to allocate some more money. Though I'm not overall in favor of putting money into two-wheelers at this point in time. But if you had to kind of relatively choose one of the four, Aisha could probably continue this march that it's seen for the last 6 months.
Okay, Prakash, thank you very much for joining in. This year, Tata Motors has been the best performing auto stock. It's doubled, 782 on Tata Motors. And after that, it's two-wheelers like Bajaj Auto, 88% higher, followed by Hero MotoCorp, 51%. Though Aisha has made a comeback with a gain of about 25-27% year to date, its rally still trails that of peers like Bajaj Auto and Hero MotoCorp. We will now move on and invite Mithun Aswath, Managing Partner at Kiva Advisors, on the show now. Mithun, afternoon, and thank you for joining in the last conversation of 2023, but look forward to many more in the new year. If you had to give our viewers the top 2 bets for 2024 in terms of stocks, which ones do you have most conviction on?
Yeah, first of all, season's greetings to your viewers and the entire team, Rima, at CNBC. I think, obviously, just to give you a little context, I think the last year's we've seen some stellar returns, both in the index as well as on the mid and small cap side. And at the current juncture, post the state elections, you saw, the markets rally quite aggressively because of, potentially the, political certainty being there for the next term as well. And FIs have also started to deploy money into the market. In terms of, a couple of ideas or themes that we like, I think, the public sector companies are in focus, primarily because we are going to see, there is a likelihood of the current regime continuing in Delhi, and we are seeing a big re-rating in the whole space. So it reminds me of the texture of the market. If you go back to 2003 and 7, we saw a lot of capital spending, and we did see public sector enterprises also take part in that rally as well. So I think currently maybe we're in the phase 1 of that space where, from skepticism, there is now optimism in a lot of these companies. However, I think as these order books in a lot of these public sector companies actually result in revenues and profits, I think people who have been skeptical will start becoming a lot more, realistic and positive on these, and further allocations could come. So, I think one of the companies that we spoke about last time as well, I think BHEL continues to be something that we like even in the coming year. They are likely to get large orders from both the defense and the railway side. And they are one of the prominent companies who will be suppliers for this whole expansion on the railway side.
Okay, and the second one, you said a couple.
Yeah, so that is one space that we like. Yeah. It's done well already since we spoke last, but I think it continues to hold a lot of merit over the next couple of years or so. Another company which I think is very durable and makes sense at any time in the market, even now, I think is a company called Info Edge India. This is something that we have recently started to look at. And we do think it presents a good opportunity to play both a revival in the tech hiring, which could potentially emanate in FY25, because we do think over the next couple of quarters, there is a bottoming out of the hiring in the IT space. We saw in 2022, very strong hiring, post which in 2023, we've seen, a deceleration, quite a significant one in terms of hiring. I think FY25 will go back to pre-COVID sort of hiring, more normalized, as, companies start seeing new contracts and they will need to start adding people again. So, Info Edge India not only plays on the recruitment side from IT, where, Naukri, their large their primary business, generates over 50% of their revenues on the IT sector. The non-IT has also started to do very well, which is more play on the India's economy and growth. Apart from that, if you see, interest rates have started to come down in the US, and this company has investments in a number of startups, which it does through 3 AIF investments that they've created along with Temasek. So we actually think this is a multi-year story. They have core investments also in Zomato as well as PB Fintech, which contribute to close to 1/3 of its current market cap. So I think this is a unique story. It's almost like the SoftBank of India. You could call it that. And this could compound your money, I think, in the mid-20s over the next 3 to 4 years.
No, a point taken. It is unique, absolutely. But I'm not sure how the InfoEdge people will take to being compared to SoftBank after what SoftBank has done in the last 2 years, right? But I get the point what they're making, Mithun. So 2 names. One is InfoEdge, and of course the other one was BEML from the PSU space, which you like, which could be good bets from here. Just a few names, Mithun. Just coming back to you, look, like if you can put up Idea. Idea is up 22%. Is the largest volume jump since in the last 2 years. You got to go back to January of 2022 to see the volumes that we're seeing on Idea today. I'm not sure what the buzz is. I mean, this is perennial buzz of fundraising, equity infusion by the promoters, etc. But that's a massive, massive move coming through. And of course, Indus Tower has also been up, but by a much more moderate 5-6%. And maybe we can look at that as well. I'm not sure. I don't think we've. That's Indus Tower. If you can have that up. There you go. 7% now. Actually, that's a big move on that one as well. 8% actually. I just want to run through a few more names. I don't think we've looked at the breadth of the move that we have across mid caps and small caps. So if you can have these up quickly, RailTel is up 15%. We just had the management of RailTel with us 2 days back, and it's turning out to be, a big mover today. Olectra was up from the morning. It's up 8% or so. There is Motherson, which is up about 5%. The stock's at 102. GMR Infra is broken above the 80 rupee threshold, and these have all got massive volumes. Surya Roshni is coming up with an 18% move. 767 on Surya Roshni. It's an extremely vibrant market. If you look beyond the Nifty, Kalpatru, of course, we had the management with us earlier this morning. Has been up since the big order, of course, 9% there. There's something like a CMAC, which is at 1,050 rupees, 11% higher. Humongous volumes on this one right now. Godrej Industries is up about 5%. Imami has got about a 6% gain right now. Crompton, the consumer business, that one is up 5%, 311. India Shelter, of course, has got a 5% pop. Motisans, the new listing of this week, earlier this week, 5% on that one as well, back to almost 100 rupees. And Dodla Dairy, Bajaj Consumer. Oh boy, it's a pretty vibrant screen, and has been that way for a while, even as the Nifty has not done very well. Nifty also has picked up from the time that we started. It's recovered about 50 or 60 points or so coming through. Mithun, from the telecom space, I mean, do you advise buying Bharti, or I'm sure Idea is on no one's radar, but it has these occasional moves. Any thoughts at all?
Honestly, Prashant, I think the only exposure that we have for our clients is through Reliance, and we don't have any other exposure on the telecom side currently.
Okay. Just a word on some of the other themes that perhaps we can look out for in 2024. What about IT? Where would you place that? Because once we come back from this New Year weekend, I think that's the next big event, right? We start talking about earnings, and that will be the first set of data points the market reacts to. And it's been a very volatile last couple of quarters. So how are you positioned there?
See, I think, Surabhi, on the IT space, stocks are trying to discount potentially that the bottom is there and there will be growth in FY25. Right now, the commentary from, say, even Accenture, which reported results a couple of weeks back, did not show that, there's going to be significant growth in FY25 so far. But I think budgets will get cleared maybe in February of 24, and the commentary will be very closely watched amongst the IT companies. I think the larger IT companies are still more reasonably valued. some of the mid caps are trading quite richly right now. So, but having said that, there is so much money in the sidelines. Whenever there is a correction, some of these stocks get bought into because looking a little forward, I think the whole AI opportunity also potentially could drive revenues to some of these companies over the medium term. So this is a sector where cash flows are strong, and whenever there is any let up in the market, we seem to see investors go and buy into them.
Okay, all right, got that. Mithun, good chatting with you. Thank you very much for being with us. And once again, season's greetings. Wish you a fantastic New Year's Eve, and then, of course, ultimately a very happy New Year as well. I look forward to more conversations in 2024. Well, with that, just quick check on what's happening on the screen. Not much is changing. 42 points down on the Nifty. Bank Nifty is still down, not as much as earlier, but still we're looking at a loss of about 0.4% for the time being. All right, let's move on. We have Gurmit Chadha, Managing Partner and CIO at Complete Circle with us. Gurmit, season's greetings. Thanks for joining in. I was looking at the tweet that you put out in the morning. So first of all, I don't know how cold it is. Guys, if you haven't seen this one, you should check out Gurmit's latest tweet. It's I think, a caricature or a cartoon which is asking itself, Dilli wale log, whether to take a bath or not, and then the bottom half says, "Keval dil saaf hona chahiye." So since I am a Delhi wala, I kind of understand the drift. But phenomenal year for the markets, and ending it in style. Gurmeet, what thoughts?
Oh, absolutely. And I think these are the moments you should be grateful to markets. I think people who have participated in markets and not tried to outsmart it are the ones who have made money. And I've said this before, been managing public money for more than a decade. I think for the first time, maybe, retail investors probably have done better than, probably a lot of institutional investors and sophisticated family offices. I think the reason being the discipline has scored over too much analysis, and that's what markets are. They will give you always extreme results on downside. We saw that. So 21 to 23 October was absolutely flat. The market did not give you anything. Similarly, post demonetization, we had a 2.5 year period, again nothing, and then it gives you returns which are lumpy. So you should take it, being grateful, and also be mentally prepared that you will also be, some of it could be taken back at some point of time. But one thing should be, the learning is that the one landscape which has changed is the dependency on FIIs have reduced. We are still dependent on them. I'm not saying that we are completely Atmanirbhar from that point of view. But so every sharp, the cycles are sharp, and when you get down cycles is the one you got to be more active. Right now you should just sit back, just enjoy the gains you have made this year, and be a little more conservative next year and preserve those gains.
Okay, wise words, words of reason. Do stay on, Gurmeet. Nimesh is standing by for our favorite segment, D Street Chatter. Nimesh.
Hi, Rima. I know the index looks like there is a bit of consolidation, but big moves in the broader markets. And actually, today the investors and traders both will feel nice because a lot of the portfolio stocks have done well today. So last day of the calendar year and a big move in the broader markets. From a flow perspective, let me add some good news. There is going to be a market at close Nifty basket buying is what I understand at a leading FID. So maybe in the last half an hour, you will see some sharp uptake in some of the Nifty stocks from a flow perspective. The momentum in the PSUs continue. Today is a day for the power PSUs to do well. A lot of institutional interest as well in terms of buying flows in the power stocks in today's trade. On the other side, some bit of profit booking in the OMC stocks. Of course, they've rallied pretty hard. Yesterday, all the stocks were buzzing as well. And also some fears of a sharp retail fuel price cut. That's been a bit of a dampener as far as the OMCs are concerned. Again, I said yesterday as well, for the January series, the two important triggers to watch would be, of course, the earnings season, which kicks off on 11th or 12th, and of course the fresh allocations, because India stands out after a big outperformance. So looks like some bit of momentum money will come back into India, and we're already seeing it, right? For the last couple of days, the cash volumes are quite high from the FI. So that would be another big trigger to watch out for. But from today's perspective, a good day from a momentum in the broader markets, and the fact that there is an MOC basket as well at a leading FI desk.
All right, Nimesh, in terms of individual stocks, what's on your list?
Well, so the first stock on my list today is Tata Consumers. That's been buzzing in trade today, and the street is anticipating a big corporate development soon. Maybe you'll see an acquisition by this company very soon. So that is something to track in Tata Consumers. The second stock is CMAC. The stock is up 10% after a large block, and I understand there's a clean out trade from a seller. Not sure what the seller identity is, but from a buyer perspective, and a couple of domestic mutual funds were buyers. So first time some institutional interest is there in CMAC, and that stock is up 10%. Third, let me just add few large blocks which are expected. Remember, yesterday I spoke about there will be a large block in Kolte Patil. It got executed in the afternoon trade, so almost 20 lakh shares got blocked in Kolte Patil into this trade. Similarly, I'm expecting large blocks in IEX, where there is a strategic investor who might look to sell after a big move in that stock. Second one is Sula Wines. Again, there is an expectation or a buzz of a large block deal very soon. And also for Sula Wines, there is also a buzz that maybe you'll hear something with regards to VAT from some states, and that could be a positive impact on Sula Wines. So that's something to track there. And the last one is Aditya Vision. Even in Aditya Vision, there is an indication that you'll see a large block very soon. Some domestic funds may look to buy in that company. So few large blocks to track, which is CMAC, Sula Wines, and Aditya Vision.
Nimesh, very quickly, anything credible on Vodafone Idea that explains the up move?
Not really, Rima. You know, again, the rumor keeps coming up every now and then that they're looking to raise funds. They are pretty much close and all, but we've not seen this for the last 2 years, right? So again, a lot of chatter with regards to the move in both Vodafone Idea as well as in Indus Tower, but nothing credible is what I have picked up, at least from my sources. But also remember, there was a Kotak note in the morning, Rima. We do suggest that there could be tariff hikes going forward, and that incrementally means positive for all the companies. But the bigger delta could come for Vodafone if that has to happen. So from a fundamental point of view, that could be the reason. But from a deal perspective, not that I have picked up anything.
Okay, thank you very much for that. Gurmeet is still with us. Gurmeet, the stock of the day is Tata Consumer, 4.5% higher on that. There is going to be the merger effective 1st of January between Tata Consumer, Tata Coffee. Market cap now 1 lakh crore plus. Thoughts on Tata Consumer for 2024?
So lucky to be invested in this for almost 6-7 years now. I think what was weighing on the stock was tea production was down marginally, and prices ideally should have been higher, but because exports were sluggish, even the prices were low. So, and Tata tends to lose some market share when production is low and, prices are soft. And then they announced in one of the analysts meet that they expect 5% volume growth, and prices also apparently should move up. So I think that's led to it, because it still contributes a third to the revenue. Also, I think the growth areas for them has been more Sampann, Soulful, Nourishco, and now they're also getting into ready-to-eat food, which is Tata Smart Foods. So there are multiple growth engines there, right, in terms of beverages, in terms of food, impulses, etc. And there's a premiumization playing out. So I'm not surprised it's crossed 1 lakh crore market cap. Second company to do so after Tata Power this month itself. Continue to, I don't have a 1 year view on this, but I intend to hold this for another at least 6, 7, 8 years as long as this growth engine sustains. And one of the most boring, beautiful businesses in the FMCG space.
Okay, not bold and beautiful, but boring and beautiful, and that's how you can classify all the Tata Group companies. Gurmeet, we need to slip into okay, sorry. We are getting into a break?
I think we will take a quick commercial break here. Gurmeet, thank you very much for joining us, and Happy New Year. And it's been great chatting with you through the course of this year, and look forward to speaking with you in the new one. Thanks very much. We'll take a quick break here. We'll come back. We'll tell you what to buy or sell today for a reverse trade on the 1st, which is Monday. Stay with us. We're back.
CNBC-TV18, embarking on a quarter century of excellence.
9, 10. ठीक है?
CNBC TV18, embarking on a quarter century of excellence.
Okay, welcome back. Now, this is the last 11 minutes or so of trade, and last 11 minutes of trade for 2023. And it's going to be slightly lower by all accounts, about 50 points down. Nothing major at all. Some of the big gainers for the year, I mean, the numbers are at the bottom of the screen flashing. And, you know, the scale of gains has been for stocks so incredible. I mean, if you just take a big universe of stocks, I mean, say the NSE 100 or the NSE 500, and just take just see the number of stocks which have actually gone up 100% or more, I think it should be a substantial, at least a 25% of that universe should have doubled. You know, that's the kind of market that we've seen, because the indices themselves, from the lows of March, from the 31st of March, the mid and small cap indices have gone up 65% for the year, 45 and 55% respectively. So it's been pretty incredible. Now, you know, the story on the RBI has responded to CNBC TV18's query on some banks being asked to lower their CD ratios. Abhishek is joining in with that important bit of information. Abhishek, take it away.
Well, RBI has responded to our query with respect to some banks being asked to lower their credit deposit ratio. Now, we reported yesterday that RBI has asked some banks to lower their credit deposit ratio to below 75%. So we had written out or reached out to RBI, and RBI has said that it is a routine supervisory engagement with regulated entities. Communication with them is on an ongoing basis. There is no intention to prescribe any particular benchmark ratio. However, the ratio to be determined by individual banks on basis of board-approved business plans that they have. Back to you.
Okay, all right. Abhishek, thanks very much for that. So that's essentially what the RBI's response is. So no level, so as to speak, has been prescribed, but RBI saying this is routine. So that's what's coming through. Let's actually shift away from the market for a bit, just a bit. To you know, some you know, maybe a little more interesting things. Not to say the market hasn't been interesting. New Year's is just around the corner. Mangalam is here. He's our, of course, party man. And Mangalam, good afternoon.
Good afternoon.
You're still here.
I am still here, surprisingly. Though the tie is off, I have to tell you that. Everyone's wondering, you know, where the New Year's would be, etc., and all of that. But I think Monday we have to be here at work. So let me put the ball back into your court and ask, where are you guys celebrating?
But you had your answer prepared.
Right back at you, huh?
Right back at you. So what are your plans?
I think let's ask the girls.
Okay,
Monday morning, 8 a.m. I think it's going to be low-key, listen to some music, just you know, old-fashioned. It's just going to be very docile.
Old-fashioned is the word. Yours?
House party.
House party.
But Surabhi, it's a new one for you, right? I mean, it's a...
I can't get over the Monday 8 a.m. So, you know, I'm just... In my head, I think my New Year's happened while I was away on break. I'll just, like, live with that.
She's partied out.
What about you?
Monday, I'm off next week.
Oh!
He's the one who's
the party man.
I'm not party or anything. I don't know, actually, where I'm... most likely, I'm going to be in the city.
That's actually the best plan. You know, you don't know where you are. But, you know, the one thing I can say, you guys say that...
What are you doing?
I will
forget
be...
the topic?
I will be at home, perhaps a few friends here and there, largely because as we talk about stock market investing, we talk about trades, momentums and all of that and stuff, the most overbought trade of the year is the 31st party. I have to say that. Extremely crowded, not the best quality ingredients, fundamentally not...
And generally poor service.
Poor service. Yeah. So you go either on the 30th or the 1st, where you have either fresh things made for you, or, not a lot of people service.
Mangalam, you know, right? And on Monday morning, power breakfast starts a little late.
I don't think there is a power breakfast on Monday morning. And the biggest reason for that, there is no power breakfast, and the biggest reason for that is because there is no global markets. So,
I think we'll be discussing the previous night's party for the better part of it.
Right. Speaking about breakfast, they say, the best thing to do to get over a hangover in the morning is to perhaps drink. I wouldn't know. But we have with us Vikram Achanta, who's the founder and CEO at Tuliho & Co. He's also, the founder of among the 30 best bars in India, joining us now. Vikram, everyone's talking about the New Year's party, etc. But the ones who are celebrating in in their houses, thinking that it will be a crowded trade to perhaps go to a bar, etc. What would be your recommendations? What are the things that people can, stir up in their houses and make it delicious?
Hi, Mangalam. First of all, thank you so much for having me on the show. And I think the mood of the hour, very much judging from what I've heard from both of you so far, is a trend towards house parties, right? I think one thing we've definitely seen, given the events of the last few years, that people have become also a little more mindful in their consumption. And they're also trading up, not just when it comes to stocks, but possibly also when it comes to spirits. People are definitely drinking better, if not more, and focusing more on activating their treat brain, really. So they're open to now spending a little bit more on their own enjoyment, rather than drinking to excess, shall I say.
So, Vikram, if I could just come in over there, I kind of concur from personal experience of friends and family around. I think the uptrade on our drinking patterns has really happened. And let's celebrate India, right? Because 2023 has been the year of Indian spirits. I mean, the rise of Indian single malts and whatnot and experimentation. So you tell us, if you can crystal ball gaze into the new year as well, what will be the top partying or, drinking trends perhaps as we look ahead?
No, absolutely. I think you're bang on. And we've seen really in the last 4 to 5 years, Indian spirits come very much of vogue. We've been in the business now for the last 23 years, and it's been fabulous just to witness the awakening, or shall I say the animal spirits, pun intended, of Indian entrepreneurs and mid-sized companies. As you mentioned, Indian single malts very much in the vogue. I was at the launch of 2 single malt brands in the first week of December itself, which just gives you some idea of the momentum in that particular space. 2024, I think, is very much going to be the year of agave spirits. Very much tequila is mezcal is my prediction for 2024. And I do predict a dark horse in rum making a breakthrough in the sector.
No, I don't drink, but I capture these trends pretty actively, because the ones who don't drink are the ones who literally read the bottle labels and all of that and stuff. Vikram, I have to tell you that this agave trend that has been, extremely gathering some steam.
What is agave? I'm sorry.
So, okay, here's how it goes, right? If it is champagne made out of the Champagne region of France, it's called champagne. If not, it's called sparkling wine. Similarly, if it's a drink which is made out of agave, it's called an agave. If it's a drink which comes from Mexico, which is agave, is tequila. So all the tequila that comes from Mexico can be called tequila. If it's not from Mexico, not imported, then it's called agave. And there are a lot of these people coming in. If you look at the way the gin boom came into India with a lot of the artisanal players.
Tequila, agave.
Gin is still
mezcal,
in, but mezcal, tequila and agave are the drinks of the future.
The man who doesn't touch a drop.
So he can get the best analysis, and then,
unbiased,
some of us can follow up on
this passionate.
Vikram, what about wine?
Evergreen.
Yeah, Sula, you're talking about this listed company now.
Yes, we've been, I guess you've been tracking the progress of Sula pretty closely over the last couple of years. And since it is New Year's, bubbly, very much definitely in vogue. I see a run on sparkling wine come the 31st of December. I would like to, however, possibly address and just put in a word of caution, given that it is New Year's. And I think given that it is the D-Day, there's never any harm in looking at the 5 Ds to observe on D-Day. So it's extremely important. One is dilution. Avoid drinking alcohol, which is neat. Just avoid shots. Do have something with a mixer, and avoid too much sugar. Dehydration. Just make sure you're drinking plenty of water. Diet is extremely important. Make sure you have some food in you before you start drinking. duration, so don't drink to excess and for too long, and discipline. Definitely don't drink and drive. Unfortunately, if the trend is towards house parties, then what's one risk we can possibly avoid. Yeah, so I just want to mark down these 5 days for D-Day for
this
everybody out there.
sounds like the advice that I would give to my 20-year-old self, right? All of us.
No, but I think thank you so much, Vikram, for bringing that voice of moderation. I mean, and it's like a disclaimer, it's like a disclosure. But absolutely, I think very, very well put.
No, absolutely.
The good drinking rules. Vikram, thank you very much. Wish you a fabulous New Year's Eve and even better 2024. With that, I suppose it's time to call it a day, a week, a month, and a year.
Absolutely. I mean, so it's going to be. So should we look at the year to date? I mean, not very much has changed, right? I mean, from the morning, because it's just a 40-point change. The year ends with a 20% gain on the Nifty. And I think on the Nifty Bank, it ends basically with a 12% gain. The mid and small cap indices, 45% and 55% respectively. So, the week, by the way, is also positive. It's about 1.6%. It was running at about 2% when we left off yesterday. But it's been extremely sort of solid markets now for many, many weeks, many, many months now. And we are basically ending at almost 22,000 levels.
Oh, absolutely. So just to cap out today's moves, the Nifty is going home with a cut of about 50 points, but we're talking about a 20% gain for the year as a whole. Today's winners, let's quickly pull out the stocks. The Tata Group had a very, very good run. Tata Consumer and Tata Motors were the top gainers. Both of those stocks up between 3 and 4%. Autos actually have had a very good week overall and a good year. The auto index up in a good 40-45%. Today's auto winners included Bajaj Auto, Aisha Motors, and a couple of other names as well. By the way, some of the FMCG frontliners like HUL and Nestle, they added on some momentum as well, 1 to 1.5% up on those stocks. That's it. Curtains on 2023 on the street. A year of good gains for the market participants. It's a wrap on this edition of Closing Bell. But don't go anywhere, because our Friday Special Editors Roundtable is coming up next.
CNBC-TV18, embarking on a quarter century of excellence.